Good evening to everyone. This is Dr.D.Kiruthika, Department of Commerce CA, Dr. S.N.S. Radhalakshmi College of Arts and Science. Yeah, warm welcome to my YouTube channel, Learn to Win. I think you are following my playlist, which is given to you previously regarding your stock market, and I have given an enough explanation about the basics of your stock market. And today we are going to discuss about a very interesting chapter in your stock market regarding your derivatives. The term derivatives is very interesting, and it is a new one to everyone. So I want to give you a very clear picture of all this derivatives with a proper example. Shall we get it? So here is the explanation for you regarding your derivatives. So what is derivative? According to your financial contract. Now, derivatives are the financial contracts, and it is a set between two or more parties that derive their value from an underlying asset, group of assets, or your benchmark. So we can say that it is a derivative which can trade on an exchange or over the counter. So here the prices for derivatives derive from fluctuations in the underlying assets, and it may be again in another words the derivatives of the financial contracts whose value is derived from the performance of an underlying asset. Here I want to be very specific about your underlying asset, that is your stock, bond, commodity, or even an index. While they can offer various benefits like your speculation, hedging, and leverage, they also carry significant risk and complexities. Okay. So there are four different types of your derivatives. They are, one is your forward contract, another one is your future contracts, and then option contracts and swap contracts. I repeat, forward contract, future contract, option contract, and swap contracts. So the derivative market is a financial market for derivatives in which a group of products, including your futures and options, whose value is derived from or is dependent on the value of a different underlying assets such as commodities, currency, securities, etc. So the financial derivatives are used for two main purposes: to speculate and to hedge investments. To speculate and to hedge investments. A derivative is a security with a price that is dependent upon or derived from one or more underlying assets. The derivative itself is a contract between two or more parties based upon the asset or their assets. What are the basic types? I told you very clearly. One is your option, future, forward, and swap. So options, the contract granting the right but not the obligation to buy or sell an underlying asset at a specified price by a certain date. And then futures, the agreement to buy or sell an underlying asset at a predominant price on a future date. Forward contract is similar to the future but traded on the over the counter. We say that as your OTC and less standardized. And swaps is nothing but agreements to exchange cash flows based on the different underlying assets or the interest rates. And again, what are the key features of your derivatives is leverage, that is magnifying gains and losses, amplifying the potential returns and risk. And then speculation, you know what is speculation? It allows the investors to take bets on the future price movements of an asset. Then next one is your hedging. It helps to protect against the adverse price movements in the other assets. Then we have to understand the risk regarding your derivatives, that is complexity. One is derivatives can be intricate and require deep understanding of their mechanics and the potential outcomes. Then other one is high risk. Leverage can lead to significant losses if the market moves against you, right? Then liquidity, some derivatives may be limited liquidity and it may be making it difficult to enter or exit positions quickly. Then counterparty risk, that is the risk that the other party to the contract may default on their obligations. Before venturing into the derivatives, we have to have a key notes of all these points in our understanding. One is through research, gain a comprehensive understanding of the different types, their functionalities, and their associated risk. Another one is risk tolerance. Evaluate your ability to handle the potential losses, as derivatives can be highly volatile. And then seek professional guidance. Consider consulting a financial advisor specializing in derivatives for personalized advice. So I think you have a good learning about your what is derivatives, and yet again we have more number of videos regarding your interesting topics and terms regarding your stock market. So kindly keep in touch, kindly watch my channel. Thank you.